37% of consumers expect home values to decline in 2023.
I keep it real, I keep it real, I keep it real, just keep it real.
Hey guys, it's Sam Hartman, keeping it real estate here in Fort Wayne, Indiana, and today we're doing a deep dive starting with this data point that 37% of consumers at the end of 2022 expect home prices to decline in 2023. And so we're gonna dive deep into that data, what kind of led us to that point, and what should we really expect for the rest of the year in 2023. I hope you find this information helpful. I hope it helps create some clarity in your real estate decisions so that you can make great, confident real estate decisions for you and your family. So let's start with this Fannie Mae survey that shows 37% of consumers expect home prices to decline in 2023. And we're gonna look as far back as 2010 with this survey. And on average, about 10% of consumers expect home prices to decline in any given year, which I think you're always gonna have that 10% that thinks home prices are too high or unaffordable or unattainable. But that just paints the picture that 37% at the end of 2022 is a really, really high number, 4 times the number of what we typically see on this Fannie Mae survey. And so what has led to this much uncertainty, to this perception of the real estate market? And we'll begin right there. And what we'll begin with is some of the expert projections that were made in 2022. I'm not even gonna get started on the national news or the media headlines and the media cycles, but I'm gonna look at some of these expert projections that were pretty negative about housing. And so Jeremy Siegel, a Wharton Business School professor, said he expects home price declines of 10 to 15%. Now, I don't know about you, but I think a Wharton professor is going to be much more educated, well-read, much smarter guy than I. And he projected 10 to 15% home price declines. Goldman Sachs projected 10% declines. And these guys make a lot of money by betting on markets, investing money, and playing the numbers. So they make a really strong projection on the negative side as well. One of the most renowned economists with Moody Analytics, Mark Zandi, projected that if the interest rate stayed elevated in a 6.5% range, which now we know we've been living at 6 to 7% interest rate range for about a year now, he projected a 10% decline in home prices as well. So these are the projections. These are the perceptions that consumers were seeing at the end of 2023 that were beginning to put doubt into their minds about the real estate market, about home prices, about the health of our market as a whole. And that's what led to 37% of consumers expecting home prices to decline. But now that we're halfway through 2023, we know these projections are off and are wrong. And so I want to look at why did these people feel so strongly? Why did these really smart, educated people in the real estate business, in the investing business, project incorrectly? And so I want to go to another expert, Bill McBride. He's the founder of Calculated Risk. It's a really popular blog in the financial markets. And Bill said that as inventory picked up sharply in 2022, he saw that as a sign that supply was going to begin increasing strongly. Interest rates were rising, which was going to affect demand. So he said that that was going to severely affect the markets with a 10% decline. But he's come out more recently and said that, however, the inventory surge of 2022 was brief. It was a bit of a head fake for the market. It wasn't something that was prolonged. It came back down into more normal ranges, and we did not see that price declines, or he's adjusted his projections down from that 10% decline. And so this is the graph of that inventory that he's talking about. The red line is 2022 new listing inventory. The other lines are the previous 4 years, so it gives you a little sense of what a normal seasonality of the real estate market with new listings coming to the market looks like. And so you see January starts low, we see a ramp up to May, which tends to be the best time, or the most popular time, I should say, to list a home. And then the seasonality starts to slowly fall off through the rest of the summer, fall, and winter season. But you can see that red line, which represents 2022's new listings. It actually saw a prolonged month and a half after May where those new listings were still rising, still spiking. And experts looked at that and they said, we're getting more inventory, people are listing their homes, people are trying to get out of the market, they're trying to time the market before those prices come crashing down. Interest rates are rising, so demand is going down, supply is going up. Those are economic principles that make sense to me. I'm not a Wharton Business School professor, but I can make sense of that. I can understand that. But here's what happened, is that supply, that inventory did not continue to rise. Actually, it declined sharply after that brief stint of increased inventory for about a month to 2 months. It started to decline sharply and is well below the historic average of these last 5 years as well. So these experts made the projection on a very small few month window of what they saw the trend with new listing inventory was looking like, but then that tide very quickly shifted and started drastically reducing the inventory of homes. And that is one of the big reasons we haven't seen those projections come to fruition. Another big reason these big negative projections have been out there in 2022 leading into 2023 is the consistent talks of a recession and the talks of a wave, a tsunami wave of foreclosure activity. And as crazy as and as weird as this market has been, as much of pressure is being put by government monetary policy on the economy to slow the economy, our economy has still been growing. We haven't had that recession yet. I mean, it could be looming, it could be it's still around the corner, but not something that is severely affecting the housing market. But let's talk about the foreclosure data. And there have been a lot of news headlines over the months and the years recently talking about the increase in foreclosures. Well, if we look back to 2020 during the pandemic, the government stopped foreclosure activity. They said banks and lenders couldn't foreclose on homes. So of course, after that has stopped, foreclosures are going to increase. If you go from 1 foreclosure to 2, you've increased it by 100%. And so that's the kind of numbers we're looking at. We were at such low foreclosure numbers that the increase looks like a large percentage increase, but in the history of foreclosure data is a small blip on the radar. It's not something that is affecting the supply of homes in the market, and certainly not something that is affecting the prices in the market. So we heard the projections, we heard why they made those projections and some of the data those experts were looking at. So what really happened then in 2022? What did the market look like? What happened with prices? What was the overall result from all of this kind of fear-mongering and news headline grabbing and uncertainty in the market? And so we're going to look at this data from Case-Shiller. Case-Shiller is kind of the gold standard when it comes to home price reporting, and it takes a 40-year average and looks at the appreciation percentage by month over the year. And again, this graph shows the seasonality of the real estate market. You see in January, February, it's ramping up. It's ramping up into that key listing and selling season, into March, April. Again, May is that most popular time to list a home, sell a home, buy a home, and sees the largest percentage increase in values. And then slowly starts to fall off in terms of appreciation month by month as that seasonality takes effect. Now, just because homes are appreciating at a lower percentage doesn't mean that they're declining. It just means it's appreciating at a slower rate. You're still benefiting from the appreciation of those previous months. And so a 48-year average, you can see there's no red lines on this graph. There's no negative appreciation. There's no depreciation over a 48-year period on this month-to-month average. But let's look at how this graph compares to the month-to-month data of 2022 and what those results were like. And so here it is. You see the first half of 2022 saw strong appreciation, well above that 48-year average. But then we saw an adjustment. The market did adjust in 2022, and we felt that in the market, and consumers saw that and felt that and saw it as a trend. But here's the thing, and we're going to look at more data here in the future. If you've been waiting for the housing market to crash, you might have saw it in 2022 and you might have missed it. It wasn't a crash. It was maybe a small adjustment. Because the appreciation was so strong and rampant, the higher mortgage rates really reduced the demand in the second half of 2022. The supply reduced as well in 2022, but it put a strong pause on the second half of the year to the real estate market, and it slid prices just a little bit as well. And so we started this deep dive talking about 37% of consumers expecting home prices to decline in 2023. And although we saw some sliding in prices in 2022, in all, we are still net positive on appreciation last year. So it was really just the back half of the year that saw a little bit less slower price appreciation and a little bit depreciation on the second half of the year. But we talked about that 37%. Now going through 2023, consumer sentiment has improved a little bit. We're actually down to about 26% of consumers that expect home prices to decline in the next 12 months. But that's still 1 in 4. And so that is still a lot of consumers out there that need this education, need this information, need this data. So please, if you know someone that's confused, that's concerned, that needs help in the process, share this video with them. I want them to see this information so that they can be an educated and informed consumer. Because ultimately, here is a really great data point that I think helps explain the importance of knowledge, of preparedness, making a real estate decision, and of confidence making real estate decisions that would affect you and your family. This graph here shows the importance of working with an educated realtor that can help share that education with you. Of people who have considered selling their home, 64.5% were more likely to list their home when they met with a realtor than those who did not. And so I think this information shows itself because of a couple of reasons. For one, an educated knowledge broker can show you how to make that transition happen. They can show you the value and the equity that you have in your home. They can show you how to leverage that equity to make your move, to make your next purchase. They can show you the reality of the market and the realistic opportunity that you might have to make that move that you've been thinking about and dreaming about. So meeting with an educated, knowledge real estate broker that can really share that experience, that knowledge and that information with you, it makes it 65% more likely for you to achieve your goal, no matter what that might be. So that is huge. So here's the thing. I always tell my clients and my customers, I would rather meet earlier than later. I would rather meet early in the process where you might not for sure know what your decision's going to be, so that I can help provide options for you, knowledge for you, and give you the context that you need to make that decision. Sometimes it results in not selling your home. Sometimes it results in not buying a home. And that's okay, because I want you to be an educated consumer and I want you to make a great real estate decision. Because when you buy a house with me, guess what? I'm gonna be the realtor that sells that house one day, and I wanna make sure you made a great decision when you bought it. So I said earlier, If you've been waiting for the housing market to crash, you might have missed it. Because in 2022, we did see several months of negative appreciation to end the year. But where does that put us today? Where are we at in 2023? And we have multiple graphs here from multiple sources that measure home price appreciation and home price data, from Case-Shiller to FHFA to CoreLogic. And every single one of these barometers, of these measures of home prices, shows that the depreciation has now swung to the other side. We've saw really moderate, minimal depreciation for anywhere from 5 to 7 months through the second half of 2022, through the first month of 2023. But we're on the other side of it now, and those price appreciation numbers are showing themselves to be even stronger than some of the declines that we saw at the end of last year. So, if you've been waiting for the market to crash, which I know a lot of people have been for the last 3 years, you missed it. And the crash maybe involved 1 to 2 percentage points in price depreciation, depending on what market you're in. So if you're thinking of buying a home, if you're wondering when the right time to buy a home is, if you're wondering when the right time to sell a home is, don't try to time the market. Being in the market, owning a home and building equity over time is gonna win. You're not gonna make your money by timing the market just right, because ultimately you and your family have needs. You have housing needs, you have living needs, you have all of these things that play into, is now the right time to buy a home, other than home values, interest rates, and all of these other dynamics that play a role certainly in the decision, but there's a lot of other things that go in that decision as well. So this deep dive is going to be a little bit of a 2-part series here. We talked a lot about the negative projections in 2022, how that affected some of the expectations and the consumer sentiment in the market. But next week, what we're going to talk about is 2023. We're going to go deeper into the house price appreciation of 2023, where we've been at so far this year, and where we look to be going throughout the rest of the year. Thank you for sticking with me, guys. I hope this information was valuable. Again, share this with a loved one or a friend or a family member that you know that could benefit from this education, from this clarity, and this confidence, because that's my goal, is to bring you the clarity and confidence it takes to be a great consumer in today's real estate market. Thanks again for sticking with me. I'm Sam Hartman, keeping it real estate.